Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up 0.3% on the S&P, NASDAQ, and semiconductor made a move today with a 1% each there. However, we got Dow, Russell 2000, transport, banks, and energy pretty much flat today on those sectors today. Interestingly enough, that we got biotech and healthcare and utilities down 1% today, while home builders up 1.5%. Retail led the entire market with a 2% positive. I remember seeing Macy's up 4 or 5% today. Emerging market pretty much flat, down a little bit. So as you can see, it's a mixed day today with the NASDAQ and semiconductor making a move along with the retail and home builders. So, but some of these other sectors and indices are pretty much flat there today. Bitcoin up 4% or down 4%. Gold, silver, miners down a little bit, while miners down about 1% today. How about miners did make a move last week? We have like 4 or 5% gaining days for several days. And so it looks like taking a breather today. Dollar up pretty much flat. Oil down a little bit, Treasury bond 0.5% positive, VIX flat there. Let's look at the S&P 500 ETF, Spider, 65-minute chart here. So it looks like we gapped down today. This is where we closed on Friday, and this is where it opened. We came down a little bit, gone right back up here, and that's the first hour. There's a reason why we saw a price bouncing so fast on that opening hour. You can see that price staying above my midterm and short-term moving average. When you see that happening, we want to give benefit of the doubt to the buyers. Not to mention, we have the gap right here. That gap was open on Friday morning. So when the gap when gap opens, when there's some kind of a shenanigan or slide next day, that gap area is going to provide that cushion, right? Not to mention the sentiment has been shifted from bearish to bullish with this thrust we've seen last week. And again, this 443 is important. I'm going to zoom out later and you'll see why 443, 444 level is important. And that was a level that we saw gap area and the midterm moving average residing in. And no surprise there, despite the fact that we did see that gap down, quickly make a move. First hour, second hour, third, fourth, fifth, sixth hour. So we can see all throughout the day, it continued to march higher just ever so slightly, making about 0.3% move today. Let's kind of zoom out here and we get a little bit of better picture what's going on right now. So you can see that this is and we can obviously see that this is a definitive pivotal level, right? 443, 444, right? Resist or support, resistance. Again, there's a cluster of support here, right? The horizontal pivot, the gap area, and my midterm moving average here. That midterm moving average definitely do have impressive resume, being that important pivot. We trade right up to it on Friday or Thursday, and we gapped up above it on Friday, right? Basically, bulls did not want to deal with that resistance because they know what happened when bulls fought it. This is where bulls trying to fight that resistance, right? That midterm moving average, trying to fight it for 3-4 days. What happened? Paint. So bulls got a little bit smart here. They're like, okay, we're right here. I do not want to fight this. I do not want to try to get above this. It has quite an impressive resume supporting bears. So what I'm going to do, we're just going to gap it over. And then I'm going to tame that midterm moving average to support the buyers. And that's what happened today with that, gap area in that vicinity and the neckline, right? That's important neckline. Neckline of what, you may ask? Neckline of this inverted head and shoulders, which we've been talking about all last week, right? That's important neckline to confirm that inverted head and shoulder formation there. And inverted head and shoulder is just a fancy way of saying that the market is establishing higher lows and higher highs, as you can see right there. Low, high, higher high, higher high. What does that mean? What's the higher lows and higher high? It means market is no longer in this short-term downtrend, we're now establishing an uptrend. So this, process that we've been in month of October, the first half of October here, that's what we call basing period with this reversal pattern. Because you can see that lower highs and lower lows, we were in a downtrend. Not to mention my short-term moving average continued to favor the bears, declining, right? And you can see that price action cultivation, right? Ever since we started coming down, lower highs, lower lows, and with that inverted head and shoulders, we're no longer providing that. The market is actually establishing uptrend. This important neckline, that's the pivotal level, because that's when things got difficult. We even made a lower low here. But that might have been that trap to trap both bulls and bears. Not just the bulls, not just shorts. Because when we see this kind of thing happening, bears or bulls will get out. They'll, put their stop loss right here, get stopped out of their longs. Shorts maybe continue to add more their shorts here, thinking that that's that another downturn, that's another lower high before this thing plunging back down. So you can see there's a lot of traps that are going on in that vicinity. But again, notably though, this was that level. That was an inverted head and shoulders head. Right, so that was the important part in the neckline and the gap and the midterm moving average. That's what we saw this morning. Gap down a little bit, got supported quickly because the 443, 444 is important. You can see my short-term moving average is now rising. My midterm moving average hasn't seen any kind of direction, really. There's a little bit of decline there, just a little bit, right, on the midterm, but overall the direction of the midterm moving average is pretty much flat. So throughout this entire time in the month of October and second part of September, in the midterm, it was a trendless. It wasn't truly a bearish trend in the midterm. In the short term it was, maybe even short to midterm maybe it was, but midterm itself, the midterm we weren't really a downtrend with the midterm moving average kind of moving sideways there. But once we jumped over it, once the bulls, kind of reclaimed that level, I think the victory is, being achieved from the buyers to kind of reclaim that level, tame that level, and with that, you can see that we got higher high cultivation happening right now. So we want to continue to give benefit of the doubt to the buyers. Should there be any kind of pullback or fall down or shenanigan or decline, right? We got 446 as a micro term support. We got 443, which is that level that, we found support today. The gap area at 442, midterm moving average at 442. There's a lot of levels, right? You know what I'm saying? That bears need to go through if they want to see any kind of downturn. This is why it's important to stick with the trend that has been working, not to get too intimate with the short-term fluctuations, because there's so many top callers all the time. There's so many people always trying to prepare for corrections, and what happens is you miss out on a big rallies. You miss out on a move. And market is up year to date. You can see almost 20% there on the S&P 500, right? And we're only away. We're about 1.3% away from the all-time high level. Market did see about 60% correction, and 6% correction, we really can't say that it's a real correction. That's just a market fluctuations, man. It happens for no reasons at all. Just for a spite, market will pull back for 6, 7, 8%. So if you're getting all rattled and getting all anxious about these kind of short-term corrections, 5%, 6%, 7%, I think it's best to kind of look at the long term. Then you can have to withstand these kind of short-term fluctuations and continue to not let this get to you and bully you around or manipulate you. Let's check out the oscillator and see if we can extract any more information. So we did push all the way to the top of his band, and that's a good thing in the short to midterm. You can see right here, push it all the way to the top. You can see right here and right here, it failed to push it all the way to the top of its band. That red line there, what happened? Tanked. What happened? Tanked. Here, what's going on? Not tanking. Not tanking, right? Is it a coincidence that all of a sudden it ain't tanking, it's hanging? Not only is holding up, it's making a move You can see that. So sentiment has been shifted. Bulls are showing strength, pushing it all the way up. Right now, what bulls trying to do is bulls are tired, and this oscillator is telling us that. So what bulls gonna do is bulls gonna try to correct through time, probably move sideways or something, like through a gap up sideways type of move, and then they're gonna wait until this oscillator to reset, and then have their energy back and go after this gap right here at all-time high level at 452. I think that's what the market is preparing to do. So going into tomorrow and remainder of the rest of this week, should there be any kind of shenanigans, should there be any kind of correction in the micro term, any kind of pullback, right? I think if you're a bear, if you're looking for a big decline or something like that, only thing you can hope for is just some crazy shenanigan down move. You know what I mean? Like, I mean, obviously that kind of stuff can happen, but as far as the overall structure is concerned, as far as the psychological sentiment of investors are concerned, buyers are getting lots of attention. They're getting a lot of confidence. Trend is up. They're building momentum, and the trend has been shifted. This is where it's going to attract a lot of buyers looking for their all-time high level. I'll come back for you. Enjoy your evening, and good luck trading tomorrow.